Dana Lyons. How are you, Dana? It's been, our normal 3-4 month period since we've last talked. Welcome back to Face, my trading warrior brother. How are you? How you doing, Dana?
Sorry, that worked better. Doing great. How you doing, Dale?
Good, man. Always great to talk. Yeah, great to talk to you. And are we near some kind of inflection point, Dana? What's your work saying here?
Inflection point, not sure. We're seeing it's no secret we're in a seasonally weak period of the year, right?
Right.
I think everybody knows that. Seasonality to us, we use models, we use actual market data to direct our models and our investment posture. So that's always the most important. What is the data doing? What does supply demand look like? What does momentum look like? So that's the most important thing. Seasonality is always what we like to say, kind of a gentle headwind or tailwind. Now, I would say this period of the year it's the winds always blow a little bit stronger. It's a little bit more consistently negative. So we put a little bit more credence into seasonality, in the July to early October period. It's also a cautious period. And even more so when it lines up with what our models are saying, which it does right now. Our models are pointed down. So still risk out there in the market. And again, you couple that with seasonality, definitely elevated risk right now. Is it the start of the next big down leg in the bear market? I don't think so. I think we should be able to make another pretty strong attempt to the upside, especially in some sectors. But right now is a time to certainly be a little bit cautious, a little bit defensive.
Okay, so that's a consensus narrative, is that maybe even the guys that are think that the market looks heavy, they're all. I'm not even asking them this, Dana. Tell me what you think. They'll go, yes, we could have a bit of correction, but not a crash. Okay, yeah. I mean, I don't ask them, but no one wants to be associated as a long-term bear anymore because their heads are on sticks right now, on the poles. So that's a consensus view. 4,200 was a big breakout area. Is that kind of what you're thinking too? And everyone's talking about, October seasonally as a better period than September. So what's your view on, say, for example, yields, which are kind of the key here? Do you think we're getting near some peak in yields, or are we going to continue to climb towards 4.5, 4 3/4 on the 10-year? What's your vibe on that?
Yeah, first, going back to equities really quick. So yes, we are longer term bears, and I hate to be part of the consensus, but in the shorter term, maybe we would be kind of in that consensus trade again, which is a very uncomfortable spot for me. But you look at the S&P and the large caps, and they've done well, and the Nasdaq large cap tech has held up well, and people might laugh at our longer term bearish scenario. But if you look at something again like the value line geometric average, so this tracks
looks like the Russell.
This tracks the median stock in the market, and we've seen really over the last year since we bottomed a very anemic bounce, like you said, the Russell or the micro cap. So the broad market, which really is a huge component, breadth and internal statistics, that type of thing, really a large component into our models. So that we want to stay on the side of the broad market, what the market in general is doing. And from that perspective, we have not seen much of a bounce off of the lows from a year ago, which certainly gives us pause and certainly feeds into our longer term kind of bearish scenario. It doesn't mean some select sectors and the mega caps can't move on to new highs, which they have done pretty consistently. And I think they've got a chance to do that. But in the broader market, the overall market of stocks, I think we're still in of the mind that we're in a longer term bear market. We're certainly in trouble in the longer term. So
How about even in the shorter term, Dana, the Magnificent Seven? I think you could take Apple off of that list. Maybe you could take Microsoft, hasn't exactly been
right,
magnificent. So, the leadership which is, pretty narrow if it's a Magnificent
yeah,
Seven, right? So if you start losing some of the seven in some duels
for
and some
sure.
gunfights, like what do you do with something like semiconductors that recently put in a lower high after 5 waves down for the first decline, and now it looks like we've kind of put in a lower high here.
Right. Well, look at something like the SMH semiconductors
Yeah, that's
did
good.
did did peg the highs from a year or two ago. I think they have a chance to make another run higher
Do you? Okay.
once this correction is over.
All right.
The biggest problem we had in July was people got too bullish. The sentiment got a little bit overheated. I think
AI.
into
Yeah.
yeah, for sure. I think
Yeah.
into the pullback in August, we probably corrected about a half to 2/3 of that sentiment extreme.
Okay.
Then in the subsequent bounce, people got bowled up again. So I think we need to work off more of that sentiment. We need to get a little bit more fearful again, which we could see as for example SMH. If we crack this 143 level, we're looking at the low 130s. That should generate enough fear to maybe put in a intermediate term low and
Yeah.
spring another
Okay.
rally. Maybe make an attempt at new highs, maybe hit new highs, that type of thing. I don't think it's a long-term sustainable type of development, but I think we have a chance for a decent
How
intermediate
about
term rally.
Apple? How about Apple here? Something that broke down before the China news. I think this guy Pinker talked about China months ago, that they could retaliate and go after an icon like Apple and limit
Right,
Apple phones. So,
right.
what are you
No,
thinking
we
of
don't.
Apple?
Yeah, we don't typically invest in individual
It,
stocks,
right.
but
Okay.
I have been tracking Apple, and certainly that is one that has, well, it was a leader before. It's
Yeah.
certainly been lagging of late, and obviously that's been a drag on um, even some of the heavy cap weighted averages, which should continue. And that again, that might if we see well, we've seen the broad market and the small caps kind of lag. If we see those former leaders start to lag in the near term, that should cause some people to kind of give up the ghost and throw in the towel, and that
Like a
should create enough
150,
fear to.
150 Apple, 145 Apple, something like that would
I'd have
do
to
it.
look at it. I'd have to look
Okay.
at it, but certainly
All right.
that would cause some people that have been, ardent bulls to kind of throw in the towel, at least in the short term, and maybe, like I said, produce enough fear in the market where we could produce a low. One group I like to track is the hedge fund community, and not for the smart money, I would say. It collectively, like most investment communities, I'd put them collectively in the dumb money group. So we
Okay.
saw into that late August ramp up in the market. We saw hedge funds really ramp up their investment, and right as we topped, at the beginning of the month, their investment allocation was peaking. Now they're back on the short side, so I think they could
Okay.
go a little bit more to
I
the
see.
negative, to the short side, before they get burned enough again that we could put in
Okay.
a decent intermediate term low, like I said. So,
Okay. So
but
here we are with the
back to
10-year.
yields, yeah.
Yeah.
So we're of the camp that the 60-year, approximate
Yeah.
60-year cycle in interest rates bottomed, in the COVID year.
Right.
So from that perspective, uh, our expectation is that we go up for many years, or I should say many decades to come, just like we came down for many decades. So I think, yeah, that's probably the low in my lifetime, perhaps. And we go up for several decades. Obviously, it's not going to be a straight line. So what are some of those key levels? Looking at around, obviously, this 4% level, it's not surprising to us that we've kind of consolidated here over the last, call it, year or so. That 23 retracement from the top back in the 80s. Once this consolidation is over, the next level you're looking at is up above 6%, I think. So is this consolidation over? I don't know. Certainly wouldn't be surprised to see us chop around here. That 340 level was key. Below that, 280. If we do get a reversal in rates, I don't see. I'm not sure if we do or not here right now. Obviously, banging against those highs from last year is the big level right now. So if we can crack. Yeah, if we can crack that 410 level, maybe we can get
that's my number.
Short-term momentum on the downside. Yeah.
Okay, so TLT, probably I'll extrapolate at your probably negative.
Yeah, obviously TLT would be the inverse of the yield. So benefit of doubt. I guess long story short, benefit of the doubt is to the downside in bond prices, upside in yields, especially in the longer term. Certainly.
So, we were talking about, there was going to be some housing data, and my comment was the housing sector has been it's been leadership in the market during a time when, people thought housing stocks would suffer with higher rates. They're starting to crack a little bit. Your view here, new highs coming, but we could still flush one more time. They all kind of look the same. These
you hit on the head, yeah. It's interesting. The REITs have been terrible, obviously, but the home builders still doing well. So obviously, ITB here was able to hit a new high, above those highs from 2021. So similar to some of the tech stuff. In the near term, I would still consider it relative strength, which is what we believe in when we're making long allocations. We like to jump into the relative strength. Doesn't mean again everything goes in a straight line. When our models are negative, then we pull in our horns. But what are the areas that we'd be looking to buy a dip if we get kind of a flush here over the next several weeks? Certainly home builders would be one, along with some of the tech stuff. Home builders, ITB, down below 80, which we almost hit, would be your initial support, but we'd love to grab it down around that 74, 75 level. We think we like stuff hitting higher highs, higher lows. We could form a low down near that 74, 75 level, be a good entry point. That would be the type of thing that we'd be buying on the dip. Also, some of the other sectors that we would consider relative strength right now. Industrials was able to hit a new high. XLI tested some support right here. We did dip our toes in a little bit here, down around 100. Would be tempted to do the same. If you look at, these do. This is what, again, we would call this like kind of longer term relative strength. So if you're looking to buy a dip, I would be looking at things that were able to hit new highs or at least test highs on the last ramp up. Here's tech again, XLK. Obviously, Apple is going to be a bit of a drag on it, but we did test those highs from 2021 after consolidation. Maybe we make a run at new highs again, and probably our favorite sector here would be the energy space. Certainly oil services, OIH hitting new highs here for the move. I think we have an OIH around 3.6. I think we can make an easy run up towards 410. Another one, same space.
That one's a little crowded right now, isn't it? I mean, you can't find anyone who's not bullish oil.
Yeah, sure. The good thing is if we do get kind of an overall broad equity pullback, it should drag even,
Yeah,
the good,
yeah,
the baby. So throw out the baby with the
yeah.
bathwater too. So you might
Everything.
get a nice entry point there. Same thing,
Okay.
XES down in the low 90s.
What's your view on the dollar? We've had a very relentless run. Are we out of juice here, or do you think there's more left after a pullback?
I think I would love to see a pullback to get a better
Long
entry point. Yeah, right now, I
103?
guess the benefit of the doubt is the upside. Obviously, we had this breakdown in July. I thought we would get more to the downside out of that, kind of reverse that quickly. Maybe got a little bit too crowded there. Right now,
Yeah.
benefit of the doubt to the upside. We're not fans of
109?
chasing
109?
anything, but
Yeah.
109 would be the ultimate destination, I would say.
Okay.
Anything above that would be gravy. Still kind of in an overall trading range, like
Right.
most currencies, a lot of assets for that matter, a lot of commodity space kind of in a
Yeah.
trading range. The yields that we looked at, equities even.
Last time you
Yeah.
were here, you were long SILJ, the juniors, silver juniors, and they were hanging on by a thread.
Yeah, more of a fan of the precious the metals themselves, especially gold. Silver should go along with it as well, but I think we've been working off that run that we made into the COVID top. I think
Yeah.
eventually we're set up for another bull market run to the upside. When that sparks, not sure. But I think we've held up pretty well, worked
Yeah.
off some of the excessive bullishness at this
Right.
point. So setting up another run to the upside. The miners should go along with it to some extent, but obviously they're equities and we'll have that force pull with it from the equity space. If you scroll back, you just look at GDX in that ramp up into the COVID top. This was only able to get up to that 61 retracement from that 2011 top, whereas gold got up to test those 2011 highs. So
Yeah. What a difference.
it'll still be a drag from the equity space if the equity space is weak, but certainly if we get a ramp up, a new bull market leg in the metals should assist the miners at least to some degree, obviously. But right now, certainly challenged. We do have a hedge on in the miner space for long the metals. Do have a hedge on in the miner space as technically a little bit challenged right here. GDX, certainly SILJ, like you mentioned, really
Yeah.
can't get off the mat. So
No, either like AG is used to be a bellwether, and
yeah,
that looks like it has new lows coming in it.
yeah,
So
definitely. Like I said, I think gold will have its day when that comes. Not sure, but doesn't look like it's ready to get started just yet.
have marijuana stocks caught your eye with the recent, has to be a short squeeze, on the news of decriminalization?
Not on our radar. We like
Okay.
we
Uranium?
we like the longer term relative strength stuff. So that would
Okay.
not really register
No,
as
that
longer
one.
term relative strength. So if we're gonna go mean reversion, we want to go, longer term mean reversion. Something like grains. So there's a GSCI grain index. We're
Yeah.
seeing kind of testing that 61 retracement of that ramp from the post-COVID ramp. All right. So maybe something like this. Certainly, obviously, the momentum's the downside. We have no technical evidence that we're turning around yet. But if you're looking from a risk reward standpoint, certainly a lot more potential to the upside than downside. So if we're going to take a stab on a mean reversion basis, be something like this, a longer
All right.
term mean
Can you
reversion.
buy this instrument, or what do you buy if you want to take advantage of it? Is that
One thing that we've
ETF?
liked is for our clients, we're
Yeah.
all almost all ETFs or exchange
Yeah.
traded instruments. So one area that we've been in is
DBA.
this DBA, which has
Okay.
actually been holding up pretty well.
Well, yeah, can
despite
you
some of the
explain that with what you've seen with the grain markets pressing lows recently? So where's the strength in is it in the meats?
we
What's
just go
holding it up?
we just go with the price action. So
Yeah,
this has been our favorite. It's held up the best. If
it
we
has.
do get a turnaround in the grains, hopefully this should be able to make new highs easily and really extend that move. So DBA
Maybe
has
it's
been
in
our
the
favorite.
softs.
Yeah.
Yeah.
Um,
Sugar has been strong, etc.
yeah.
Okay.
Another
Uh,
area that you guys, I know you love to
oh,
talk the
Japan
currencies, but Japan has been our favorite, especially obviously
just
hedged.
made a new high.
Japan has been absolutely flying. Yeah, the Nikkei has been great,
Yeah.
holding up well. We think it's in a long-term bull market, but even hedged, it's been even better. So here's the DXJ.
Oh, yeah. So you're
DXJS, the
hedging in.
small cap
Yeah.
hedged, has been flying. So obviously hard to chase it right here. But
Yeah.
if you're looking for areas, there's always something on a bull market, right? So Japan is certainly one of those areas. Even if our longer term bearish equity thesis is valid, Japan
Is
doesn't necessarily have to go along with that because
can
definitely
the
on a
recent
different cycle than the U.S.
okay, can the recent actions in China turn things around for them?
Obviously, nothing goes in a straight line. Like I said, would I be chasing this move? No. But obviously, like I said before, we like things that are hitting higher highs, higher lows. So
And
right
China's
now,
not.
this isn't a bull market.
Yeah.
If we get some sort of a correction, obviously our right now in Japan, obviously our tendency would be buying any dips, buying any down waves. So that's what would be on guard for. China. Not so
Yeah.
much.
That's not a
We're
relative strength leader, that's for sure.
no, certainly not.
Yeah. Okay. All right. Well, Dana, nice run through.
Yeah,
Anything you want to
always.
wrap it with?
No, I would say right now our niche is obviously equities. I would stay defensive now. I don't think I'd be on lookout for a some sort of a scare here, but it should produce a decent buying opportunity. Will it be a durable one? I don't think so, but should be some profitable opportunities to the downside first, then to the upside, and then in the longer term, I think we're screwed.
Well, let's leave it on that
Yeah.
optimistic note.
All
And,
right. Sure.
but Dana, before we're screwed, how do people follow your work and take advantage of the opportunities that aren't going to matter in the end anyway, because we're all going to be dust?
uh, you got it. Obviously, our main business is managing money. J
Yeah.
Lyons Fund Management is our money management service. We do have a trader
You're gonna change
service.
your high school graduation picture
No,
on your
never,
website?
never.
Okay,
Hey,
all
I
right.
just turned 50 a couple weeks ago. I'll never
Yeah,
change
all
that.
right. You're a
We do
young
have a
man.
traders service called the Lion Share, which is a daily service when we pretty much tell you what we're doing in our management service, and you just pull the strings yourself. So the Lion Share, lionsharepro.com would be that the URL there, and you can find us there. Shoot
Okay.
me an email if you have any questions.
All right, Dana. Well, someone who trades with the heart of a lion, Dana Lyon's heart. So I appreciate you coming by. I always like catching up with you, Dana. And thanks for your views that, the takeaway is there may be a little bit of a shakeout, but it's going to be a buying opportunity in relative strength sectors.
Appreciate it, Dale. Thanks for
All
having
right,
me
buddy.
on, and I'll always enjoy your show.
All right. Thank you, Dana. Everyone follow Dana at J Lyons Fund Management on Twitter. Go to his website. Some very measured ideas by Dana and his work. So check it out. Again, thanks Dana and everyone. You could join the team in around 17 minutes on the morning edge. That's a wrap. Don't just count your sectors or pips, count your blessings, and we'll see everyone tomorrow for the big Fed day prior to the Fed. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.